Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the NASDAQ100 futures chart. Just before I start today's video, for anyone who is interested in joining my signal service, please do not hesitate to visit my website, dailymarketmovements.com. I've left a website link in the description of today's video and I charge a very small joining fee of $29.99. But let's talk about the NASDAQ100. Friday was a very volatile day. We had non-farm payroll figures that come out a lot better than anticipated. And unfortunately at this moment in time, we are trading in an environment where good news is bad news and bad news is good news. And of course, the job number continues to be strong here in the US economy. And why is that bad news for the stock market? Well, the Fed's going to be looking at that, thinking that, great, providing that the job market is continuing to be strong, we can now go and be more hawkish and hike interest rates. So, that's what we are seeing, and that's why we saw the stock market turn over here on Friday, and we pretty much prepared Thursday's gains. But that's pretty much it. We're still trading around 12,500. We're largely positive for the week, and of course for the month, as it was the beginning of June here. And I still think we still have a little bit further to go here. I still believe we will go and hit that 50-day EMA. We haven't quite hit it yet. It's just trading at around 13,076. I think that's an area where we will hit and most probably get rejected. I'm seeing many signals that this right here is just what we call a typical bear market rally. And I personally, I think that we will get a big rejection eventually, and it will send us back down towards the lows, which is around 11,500, and we could even go lower, guys. We could even go and follow through to 11,000. Ultimately, though, I do not believe we are going to fall below 11,000. I've said this for some time, but this is definitely looking like a bear market rally here. From where I'm standing, we need some fundamentals to change, whether that be the Fed becoming more dovish or inflation coming down significantly. But the good news is that next week we will get a very important reading, and that being the CPI index. For those who do not know what the CPI index is, it's the consumer price index, and it basically lets us know what the inflation figures are. And I think the estimates are coming in around 8.1%. If we get lower than 8.1%, meaning that inflation has in fact decreased, that could signal that inflation has in fact peaked, and that will send the market rally, and it will probably explode towards the upside. But vice versa, if we get a higher reading than anticipated, we can see the markets fall down drastically. So very important weeks on the 10th of June that we get that CPI reading. So that's what my eyes will be looking at going into the new trading week. But I still believe we can go and target 13,000. We haven't quite hit it yet. We had our highs up at around 12,850, but I believe that we can definitely go and break above that and go and target 13,000. So if you're a short-term trader, I would be looking to buy this market. If you're a longer-term investor, and I would just continue to hold.